Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. Welcome back to the show, Mark.
Glad to be here, Jim.
Mark, do we still have a special offer for our listeners?
Yeah, let's do it. 2021 half off. Still using 2021 half off from last year. Get you 50% off at VRTrader.com. That's Victor Robert, VRTrader, TRADER.com. And use 2021 half off in any of the promo code slots for any time frame you wish to subscribe. Thank you.
So the stock markets today, all the numbers were in red, the NASDAQ taking it the hardest. What's the story there? Or is this, again, just a midterm kind of minor correction and things will be onward and upward from this point?
You know, it's a tough call because these stocks are way overvalued. NASDAQ topped out before the big market, the Dow and the S&P topped out. And they're repricing a lot of these stocks. There was a negative story on Facebook today that took it down. I just think, we're in this treacherous time of year. We know that the January barometer told us that it could be a down year. Doesn't mean it's going to be down all year. It could have a big rallies and sell-offs along the way, but it's not painting a very rosy picture. And certainly the most overpriced stocks were the NASDAQ and a few names. I mean, basically, if you look at the S&P 500, most of the performance of the S&P and the major indexes is a handful of high-tech names, like Netflix and Facebook and Microsoft and Tesla and Nvidia, and you can just go down the list. So, most of I think if those big names were taken out of the list, instead of being up 20% for the year, the indexes might have been up 6%. So they were way overpriced, and they're being repriced now. And you got to wear the bear hat for a while. I mean, I think we're going to come out of it at some point. I don't think we're coming out of it right away. We did have Groundhog Day, as you know, yesterday, and the little bugger saw his shadow, which said 6 months of more winter. But more importantly, I've told you that, you get some negative price action within a couple of weeks of the Groundhog Day. So, that's not too surprising. I've been writing about this for years. Meanwhile, you just have sentiment out there is negative. Everybody's worried about everything. I don't think they, I worry about other things in the geocosmic sphere, which people don't pay any attention to, but, they're worried that Putin's going to do something in Ukraine, or China is going to do something with Taiwan, or Iran's going to have the nuclear bomb tomorrow, and the Fed's going to raise interest rates so dramatically it's going to wipe everybody out. And, they've got a lot of reasons to be concerned. I was more concerned that actually there was a story that came out in Forbes magazine yesterday, I believe, which really I almost fell out of my chair because you and I talk about a lot of these oddball supposed geocosmic events. There was actually a story in Forbes, which is one of the leading financial magazines in the world, saying, well, I think we could survive if a asteroid hit the Earth. Do you believe this was in Forbes? I mean, I've been talking and writing about this for years, and now suddenly they're saying, well, humanity may still survive, and we're not going to be like the dinosaurs when that asteroid comes. The big question I have is, are we being prepared for something, Jim? I mean, I've seen this. You can get a list from the NASA and the space agencies, a list of all of the asteroids that are within cosmic distance of the Earth. They measure it in, like 200,000, 300,000 mile increments or something. The closest one was 1.2 million miles, so well beyond the moon. But I've been following this for years. Now suddenly it's, well, we may survive if one hits. And meanwhile, we've been talking about volcanic activity as being the biggest risk. And as we mentioned last week, you got the big blow-off out in the Pacific near Samoa. And, we had some waves even hitting the California coast, and you got earthquake activity. Meanwhile, all the commodities themselves, ETFs are rallying, like corn and soybeans, and wheat, and, there's crop shortages. And, backing up to that volcano, that volcano that went off, sometimes some studies show that there's like a 1 or 2 year lag in the effect on the atmosphere and the ability, of blockage of sunlight and the ability of plants to grow. So, there may be a delayed effect with that volcano that went off. And if we see a few more of those, they're going to have real crop shortages and starvation around the planet. I think people are going to be more worried about eating than whether their stocks are up or down. So there's a lot of interesting stuff going on. The people are worried. The market is down now, which is no surprise. Let's see if we get another rally try. We hit resistance. We came big sell-off, came back to resistance, and now we're backing off again. And I suppose if they can go through resistance, maybe they'll try another rally. But, I'd be real surprised. It could happen, but I'm real surprised if you're going to see new highs anytime soon in the market. I would think more later in the year, mid-year, the end of the year type of thing. We'll just have to watch the technical indicators.
Is this a time to re-examine gold or getting into gold mining juniors?
Yeah, I like them. They're cheap. I did a presentation just a couple of days ago about all the major markets for this World Outlook conference is coming up in Vancouver, and I'm looking for stuff that's way down that already kicked the stuffings out of. Cannabis stocks are in that group. Gold and silver have way underperformed here. They really didn't kill them, but they're still down relative to the market. So, when you see things that are way down, that sort of attracts me. So to answer your question, the risk reward is probably a little bit better being in it than not being in it, considering it hasn't broken out the new highs and has run amok to the upside the way the NASDAQ did and so forth. I'm sort of biased more to silver than to gold. I think having a little bit in the portfolio is okay, if you're looking to diversify a bit. But that said, there's no confirmation that a major breakout has occurred and we're going to take off big. If silver really takes off and goes through $30 an ounce, it's around that $22, $23 level. If it goes through 30, then you could be looking at something really significant. You can get a lot of shorts covering. You could really have an upward acceleration. You might even see $75 in silver, if that happens. So, like anything else, we got to watch the tape action, the momentum, and see if that's where the buyers are. To long-winded responses, we have some in the portfolio in the educational list here that we put out for our letter, and it's there, but it's not jumping up and down like it's ready to run right here. But it may change tomorrow, so we're watching it, and I like the fact that it's relatively inexpensive compared to the highs we saw back in 2020.
Is copper one of the commodities you should be taking a look at? Because I just read an article that said if we all go to electric vehicles, the transmission lines and the cars themselves will consume more copper over the next 20 or so years than all the copper mankind has consumed in its entire history.
I agree. If you're taking that 20-year viewpoint, how many traders and investors do that? But I suppose some do. Yes, copper is the place to be. Lithium is the place to be. Palladium is the place to be. All these ingredients are needed. So absolutely. But on a short-term basis, lithium had already had a big run. Copper has had a big run already, anticipating something for 20 years down the road. And some of the stuff I'm looking at says they might have, they've got a little overbought here. Doesn't mean they're going to go collapse, but I'm not chasing lithium and copper here. They've already had a big run in anticipation of all the stories and stuff. If we get more of a correction, I might be more interested. But if you're already in it and have been in copper for the last year or so and lithium, then you should probably hold your position because you're in at much lower levels. And if you're taking a long-term view, you're absolutely correct about that viewpoint.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Crude has been on an amazing run. Is it going to continue?
I think so. I've mentioned previously, you asked me, we talked about crude being in a bull market. It's so obvious. I mean, we have production shortages, governments against, particularly the crazy government here in the U.S. against opening, doing more exploration, discouraging exploration, shutting off the pipeline project, on and on and on. Of course, fear of war. Again, speaking of Putin and Ukraine and what could be going on in the world and other conflicts, and that might create shortages. So we've talked about this on this broadcast. I think I mentioned a number as high as 120, maybe back to the 2007 high of 140 is all possible. And on a multi-year basis, I can come up with huge numbers like $300 a barrel. I mean, looking out 5 to 10 years, if the stupidity continues about being anti-oil and pro-only alternate energy, which can't really supply or replace the energy our needs, it may take 100 years to convert over, not 20 years, the way all the the leftists who are so promoting this, viewpoint. It'd be great if you had a pollution-free world, but that's not going to change global warming, which is a hoax to begin with. It's a climate issue, not all man-related. So it's just reality. So I think demand is going to put pressure on crude oil, and if the technicals change and I see some type of reversal that says that I'm wrong, I'll state that. But we have some ETFs for crude oil, including some shares in the VR Trader list.
Cryptocurrencies. Does Bitcoin just follow the S&P?
I don't do a correlation of that to see if that's true or not. I don't like tying markets together, but the truth is it is in a corrective phase, and it has come down. And my greatest fear about it is that the corrections can last a while. When we had the big peak back in 2019, I believe, basically it took a year and a half, 2 years for the thing to turn around and explode back to new highs. So we could have seen a high for a while, but I'm not changing my long-term view that this is the wave of the future. Not only Bitcoin, Ethereum in particular, which is now being used in the metaverse non-fungible token category, because the non-fungible tokens are generally paid for with Ethereum, and you have to move it from your wallet into these various websites that are selling the NFTs, or your ability to create, unique artwork or buy real estate and do all these really neat things now that the metaverse NFT market has opened up for traders and investors. So Ethereum is going to hold some value for that reason, and Bitcoin, still limited. I mean, there's only so many, 20 million coins or something that originally created. No more can be created. It was the first out there. Yes, overall bullish. We're in a little corrective phase. It could change tomorrow. And we've already had a big correction, both in Bitcoin and Ethereum and many other coins. But the same token, we're seeing these non-fungible tokens, the NFTs, and some other of the many thousands of cryptos that are out there that are not NFTs, but other cryptos that have been trading and doing well. So you have to sort of, pick your poison, which ones you want to trade, which ones you want to hold. XRP is being touted as probably one of the next big plays out there, because there was some litigation between Ripple and the U.S. government regarding whether it was a security or not. So a lot of the bulls are saying XRP may be the big play out there. I think it's only around 50 or 60 cents for the coin, compared to Ethereum, which is $2,500 a coin, and Bitcoin, which is that much, much more expensive, with $35,000 a coin. So there are a lot of other opportunities in that sector. I would definitely encourage people to check out the NFT world. There's a website called OpenSeas. They have videos explaining things there, which is really interesting. But some of these little NFTs have gone from like $200 to $500,000. And I can't explain why, but some celebrities are creating NFTs, and they're putting them up as like what's the term? Basically representations of themselves. This is me. This is my NFT, and they put it up on their websites and whatever. Some notable people are doing that. In fact, you're gonna have to. Was it Brady? Tom Brady just retired from football. I just read yesterday he's creating an NFT business. Or getting into the NFT business. So, you gotta check that out. The NFTs, while Bitcoin and Ethereum are going through their corrections or whatever they're going through right now, and possibly because of the NFT market, that's where the action is. So you might want to check that out.
Mark, thank you so much for chatting with us.
Have a great day. Thanks for having me.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. If you have any questions for Mark or any of our other guests, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.